Hi, a very bad day for the market. Today, 9th of March, Monday, market is going to start in a negative note. But it's not a normal negative. It's Gift Nifty is showing around 800 points down. So obviously the meltdown continues, and this time this is the largest single day uh, fall so far since the war began. Now, the question is, what would be the strategy ahead? Is it good to invest at this point in time, or should we hold? That is a point of discussion in today's video. So please stay tuned till the end. Obviously, we don't know. No one knows where is the bottom. It can further go down. It can further 1,000 points, 2,000 points. In my last video, I also did mention that this is the toughest job to find the bottom. No one knows where is the bottom. Suddenly, if war stops, suddenly we find that market rebounds and everything is gradually normalizing. Although some of the stocks will participate early, and some of the stock will be late or may take much longer time to revive. So those things will be there. So, two questions here. One is it good time to invest? Where is the bottom? As I said, we don't know where would be the bottom. No one can say today where would be the bottom. But in that case, what would be our strategy, and which stocks or which sectors should we focus at this point of time? So, first of all, where is the bottom? I said it's very, I would say, very unnatural if we start finding bottom. We don't know. No one can say today where the war is heading towards. But one thing is very certain, that US also said that the 90% reduction of Iranian retaliation or Iranian attack. So that is a good news. Good news means yes, some relief obviously, but this slide of this big slide today is driven by Israel hit the one of the largest oil depot in Iran. So this war, especially from the Iran side, we have seen they kept on targeting infrastructure across the Middle East. But this time, this is the very first. I think this is the very first attack from the Israel sent, which targets a very major oil infrastructure. So the impact is very dangerous, and 24-25% movement we have seen in the crude Brent, and there is no more spread between Brent and WTI. Both are around 114 $115 per barrel. So obviously very bad news. We have seen just 8 9 days back it used to be around, Brent was trading, sorry, WTI was trading around 65. Even a week back it was around 60. So in 2 weeks, 60 to 114, almost 90% jump in the oil prices is obviously a shocking news, or a shock for the market also kept on melting down, and the point is where we are heading towards. uh, I In my earlier videos also, in my last video also, I did mention that levels will keep on coming and keep on going based on the war and its intensity, based on the crude prices. So if oil star keeps on moving, if it moves towards 130 150, it can be anything because there is no limit. So obviously market will further break down. You will find 20,000 also will not be the bottom in that case. Very difficult to correlate, but now this negative correlation is very high. This negative correlation is very high at this point of time. So uh, what would be the strategy? So again, coming back to the point, what would be the strategy? Strategy is gradually averaging stock, that could be one strategy. Your target stocks, if you have liquid cash, and if you are trapped with your portfolio, then means getting out so low will not be very good idea for many investors, where people are invested a huge amount, already invested in so obviously it would be good idea to wait, hold for some time, because absorbing loss for certain portfolios at certain condition will not be possible, will not be very good idea, or will not be very prudent idea. But for certain cases where people ready to take loss, many of them has already taken our day 2 days back. Many of the investors, I believe, that has taken have taken losses uh, and waiting for a fresh entry at the bottom. Again, I'm saying bottom, we don't know, but yes, war stopped. If you get even 300, 500, 800 points higher after the news of war has been stopped, then that would be better. That would be better in the sense, even 800 points up will not be a problem, because still you will find you are much lower than its high. Now, fresh entry, as far as fresh entry is concerned, where one can look at two things, two areas I specifically focus. One is defense at this point of time. Oil and gas and energy is looking very attractive. uh, I'm not naming any specific company, but one can have a look at the uh, oil explorer, because in India we are 90% dependent on imported oil. At the surge of the oil prices, that in domestic oil will be inevitable for the country. And also there are so many policies lined up which are going to increase exploration, or which are going to aid exploration coming days. So obviously oil and gas, means specifically oil explorers, means upstream companies are very much in focus. And defense, obviously, in this scenario, when so much escalation of the Middle East situation, defense is something we are also realizing that there is no uh, respite, rather than keeping your defense infrastructure ready. No one knows at this condition, at this diplomatic international geopolitical situation, anything can happen at any point of time. So we have to be very much prepared for this, and at this juncture, like spending after defense is a must. That's why defense must be in the focus. And along with that, I would say there are some opportunities which has not been I would say uh, which has not been could not be, actually, due to the market condition, we could not take the advantage of certain events like EU FTA. This EUFT is going to bring a big opportunity, but due to the market condition, entry was very difficult. But as meltdown continues, as some of the means most of the stocks are falling very sharp, so entering in the market gradually, or even after finding the like confirmation, that getting the confirmation that war has been stopped, even if it is 800,000 points higher, I'm referring in terms of Nifty, it will not be a very bad idea. So in that time, at that time, like some of your stocks, some of the chosen stock at the lower level can be from those sectors which are going to be beneficiary of the EU FTA. Which sectors are going to be beneficiary? One thing is coming in my mind very much, that is textile. Now we have to see which companies are going to be benefited, because textile does not mean that each and every company will be benefited, not at all. Which companies will be benefited? Obviously companies who has some exposure in EU, companies, like if you consider home textile companies, let me clarify. If you consider home textile companies, home textile companies are very much exposed in US. Their larger chunk of revenue comes from US. Europe contribution is very very small. So on that backdrop, US tariff, volatile tariff will play a crucial role and will obviously supersede uh, EU trade deal. But companies like ready-made garment companies who has exposure in EU should be in focus. So those companies at the meltdown towards the end can be a good idea to keep in the portfolio, to enter in the portfolio. And also companies in EU FTA, which sectors are going to be benefited? Textile, leather, then comes gems and jewelry. These sectors are directly going to be beneficiary. We have to keep a close eye there. And yes, chemical also up to a certain extent. So again, chemical means it's so diversified, so vast, we have to check which specific chemical is going to be benefited, who are the manufacturers, whether they have capacity, whether they have exposure in Europe, what would be the next strategy. So those things we have to keep in mind, and then we have to choose the correct stock. So these are going to be my strategy in coming days. I'm not naming any particular company. Those are the work you have to done from your end. uh, but yes, gradually entering into the market, averaging it out. Again, averaging means uh, it's we cannot say like 40% 50% now and later for another rest of the part. It's very difficult to take a call because everyone has some opportunity cost. If market keeps on falling at certain point of time, you may find yourself running out of cash. So it would be better if you very slowly enter, and once the confirmation comes related to end of the war, then even at some higher prices at the jump of market, it would be prudent to get into the market. So that is my take at this point of time. So stay safe and stay and think about good investment coming days. Happy investment and happy trading for all of you guys. And don't forget to subscribe my channel for having detailed discussion or event driven discussion. Thank you so much.